So don't rush your trading, okay? You don't need to get into the marketplace at the top. And what price will often do is when it is moving well and making these big impulses, it will then give you other opportunities to enter. Now for me, I'm catching both. I'm catching one at the top, one at the bottom, and I'm getting in and out.
Welcome back, team, to the final part in the 3-2 technique. Today we're going to discuss the 2 technique. We're going to go through some examples. I'm going to show you exactly how I use it. As always, if you haven't done so already, please make sure you're subscribed to the channel.
Now, personally, on most of my trading, I will typically use the 2 technique for most of my trades. So I took this trade earlier in the week, okay? 3 time frames lining up is going to give you really high probability trades. They're going to happen a lot less often, okay, because you need to get 3 time frames lining up. What is more likely is you're going to catch trades off the 2 technique, okay? And the 2 technique is where I generally get most of my wins, okay? The 2 technique's really simple. You get a general bias from the higher time frames. So, okay, we're looking at this. Okay, we see price has broken structure to the upside. We are in a downtrend, but for the short term, at least it is in an uptrend. Okay, so for me, until I reach kind of one of these levels, like this level or this level, okay, which are the extremes of the range, for me, I'm looking at buys. Okay, so firstly, I'll start framing those buys on something like the 15-minute time frame. Okay. Now, if we draw this supply zone here, you can see it's a really clean supply zone, okay? Nice raid down there of the lows, like that, okay? Nice breaker structure here of the highs, like that, okay? We now know that we are bullish in pressure, and we now know that the market has somewhat changed a little bit. Hi, I'm just recording a video. Can I call you back? Okay, okay. We now know that price is bullish in pressure. Okay, so we've got a guideline from the hourly. I'm not necessarily drawing a zone on the hourly time frames in this example, although you might argue that this is a 30-minute zone and sometimes it'll be an hourly zone. Okay, but I've got my general consensus. My bias effectively is based upon the hourly time frames. That's something I'll always do. Okay, but the 2 technique doesn't require you to have 3 zones in 3 different time frames. It just needs 2. Okay, the first one I'll usually use is the 15 or the 30-minute. That's where I take most of my trades from. Okay, it's very, very simple. I'm just doing exactly the same as we discussed before. Okay, so I'm dropping down to say the 3-minute time frame. Okay, 3 and 5-minute. For me, I like trading the 5-minute, but I can see more candles on the 3-minute, if that makes sense. But generally breaks of structure on the 5-minute will be the same as the 3-minute. Just going to delete this just so you can see exactly how I played it out. Okay, so we had this big push up. We had price come back in to test the zone, and we then had this kind of price action here. Okay, now the first thing is you can take this in one of 2 ways. Okay, if you're really confident on your zone, and you're getting all the right signals, you might want to take a risk entry, which is something like this. You get a nice push up like that. It creates equal highs, which is liquidity, and it does wick above. Okay, that does give us an indication, like a breaker structure, that price is likely to push up. Okay, that's kind of one way to do it. And again, you'll get your 2 hour out of it. Potentially, you'll have got your nice 3-4 hour out of it as well. That is a good trade ultimately. Okay. What I like to do is, if I've got a reason for price to move high, I'll take it long like this on the 2 technique. Okay, but what you could have also done is waited for this breaker structure here. Okay, which is a really clear and obvious breaker structure. Framed that down move, and now we have a liquidity clearance here, which is a good indication price is going to push up. We've also got a breaker structure. And then very simply, we just take the trade like we did before. Okay, hold to your 2R, hold to your liquidity points, and you've got a lovely 3R out of it there. So I'll use the 2 technique in almost all of my trading. It's kind of a staple, really. And when you start thinking about why you're taking trades and where they're headed and why you should be taking them, that's really where you start getting the really strong trades. Let's see if we can find another one just off the cuff. Just bear with me. Let's see, that's some trading we did last week. So yeah, very, very similar. Okay, so that's a couple of positions I took last week. Let's have a quick look at this. Okay, so the hourly time frame, we know we're heavily bearish. Okay, nice big push down, major breaks of structure. Okay. And you know, I suppose really we have got an hourly chart there that we can use. Okay, so we've got this push down, nice breaker structure, and we know we're heavily bearish, so we're looking for kind of sell signals. Drop down to my 15-minute time frame. Okay, and I'm looking for a zone on the 15-minute, which is this one that I drew here. Okay, now price came into this zone and started making all the right noises. Okay, for me, when I'm looking for trades, I'm looking for, you know, kind of signals. You'll get a bit of a feel for what price wants to do. If price was moving up into this zone like this, then we're staying away from it, okay, because it's really impulsive. But look at how price has reached this zone. It's pushed up, it's then failed, it's then really struggled to reach any higher, okay. So this gives us an indication, now we've tagged 50% of the zone as well, that we're probably going to be going short here, okay. If we drop down to the 5 minutes, so we've got our 15-minute zone, okay. We drop down to the 5 minute. Very simple again, we're just waiting for our structure to change. So this is kind of meandering, not really doing anything, breaker structure north, then we've got this kind of another breaker structure up, then failure to make a new high, that's often a good signal, and now a breaker structure. Well, that for us now, that's our entry. So we draw in our breaker structures, we have multiple breaks of structure as you can see there, we draw in our breaks of structure, okay, and we draw on our zone like that. Took this one a little bit late, as you can see, but let's say I had caught it properly like that. Now that's a lovely 13R trade that we've took. You're definitely getting your 2R out, and if you were holding to say liquidity low, for example, you know, you've taken out there 6R. So understanding why we're using multiple time frames and how to use them is really important. Use the 3-2 technique in your trading. If you get the 3 technique come up, they are fantastic. They're really high probable and you can keep adding into them. They're great. But in your day-to-day trading, you will usually just use the 2 technique. It in itself is so profitable, it'll make a massive difference. It's about framing them on the right time frames, because it's so confusing out there. You don't know what time frames to trade. Should I be trading the 1 hour? Should I be trading the 50? You know, it gets really confusing, and you end up placing loads of different zones on loads of different time frames. This is a framework of how you can use them properly. The 15 and the 30 minute are great zones to trade from. If you want to be nice, quick, in and out of the marketplace, find a clean zone on the 15 or the 30 minute, like this one, okay? Wait for price to show you its hand by breaking structure, like this one. When price gets back into it, watch what price does, okay? Does it look like it's going to go short? You know, if this price had come into here and gone like this, okay, gone like this, and then really struggled to make its way back down, but then pushed up again, and then really struggled to make its way back down, that doesn't give me any indication that we're going to be going short, okay? But what price has actually done is it's pushed up, and then it's kind of like meandered, and then it's pushed up a little bit more, but really struggled, and then it's had a big push down, and then really kind of struggled to get up. The kind of impulse and correction of price is something that's really good to get your head around, okay? If price is struggling to make its way up, but impulsively moving down, that's a good signal that we might be then potentially failing to make a new high, and then giving us an entry like that, okay? And pushing down like that. If, however, price is impulsively moving up and correctively moving down, that doesn't tell us that the buyers are losing control. That tells us that the buyers are in control. So what we really want to start seeing in these trades is, for when price reaches your zone, a really kind of corrective push up, then impulse down, corrective push up. And look at this one, okay? You've had these kind of, look at these, right? So all the moves up were really kind of corrective. You had a little bit of impulse, but then an instant push down, then another kind of corrective push up, then a nice push down, then this really kind of choppy move down, and then a failure to make a new high. Then we've got our impulse. You can see it better on the 5-minute time frame. Okay, let's get rid of this line. Okay, so the moves down are impulsive. They leave imbalances behind, whereas the moves up, they're becoming more and more corrective. You know, the time it takes for price to get from here to here is a lot quicker than it took from get to here to here. Okay, same thing. The time it took for price to get from here to here was a lot slower than it took for price to get from here to here. So if the sellers look like they're getting stronger because they're making these big candles down, that's when we can start looking for trades. And the important thing is to wait for these things to line up, because you know, you could take this trade early on these minor breaks of structure, but you'll get stopped out. Wait for this kind of arcing change of hands. You can be patient. You don't have to jump into them straight away, because even if you do jump into them straight away and you jump in a little bit early, look what happens. Price gives you another zone here. Let's just go to the 15-minute. Price gives you another zone here that you could have traded from. It's probably cleaner on the 30. Let's get rid of that. Okay. So you've got this zone here that you could have traded from. Nice impulsive move down. Let's drop down to our 3-minute time frame. Okay. We had that break of structure there. Let's frame our zone moving up. Okay. And then you could have traded it like that. So don't rush your trading. Okay. You don't need to get into the marketplace at the top. And what price will often do is when it is moving well and making these big impulses, it will then give you other opportunities to enter. Now for me, I'm catching both. I'm catching one at the top, one at the bottom, and I'm getting in and out really, really well. And for me then, I'm holding this down there. We've just pushed down. Let's just see what happens. Let's see if it wins. I think it does. 2 seconds. Yeah, okay, so that's our target now hit. So we've got our 2R out around here. And then our final target might have been down at this liquidity low. That's our 3R out, and we're done now. We've got 5R out of this marketplace, and we're happy. And that's how I like to trade, kind of get in and out. You know, until very recently, I would hold trades, and I'd like to try and catch the lows or catch the liquidity low like that. Sometimes it does happen, but what happens more often than not is you end up getting stopped out of them. Now, you would have caught this one, okay, so that could have been another target. What you could have done is taken half off there and then left the remaining to there. So, you know, there's a plan that you need to build around it. But use the 3-2 technique. It's really, really important. The actual understanding of which time frames to use and which time frames are going to enter you in or out of trades is really, really important as well. So thank you for tuning in, team. As always, head over to the Instagram at Strong Money Forex, where there is a free mentorship group. I'm opening up my remaining places now. Once they are gone forever. I want about 100 people in there, and then eventually when the course comes out, it will be a paid for mentorship. So make sure you don't miss out on that. If you are struggling with your trading and you found that this video has helped, please make sure you check out this next video. This is a single technique that I use to maximize my trades. If you watch this next video, I promise you will increase your profit tenfold.